PlanB just published a new video and I want to comment this yet again. The last comment video on PlanB's video was quite successful, a lot of people liked, subscribed, etc. So I want to do another commentary. Let's have a look at where I think PlanB might be right and in other places where he might be too optimistic, because that, I think, is his bias. He tends to be a bit too optimistic.
Welcome back to PlanB on YouTube, my monthly analysis of Bitcoin charts. First chart is the stock to flow chart, and not much has changed because Bitcoin closed this month at 42,000, and that's the same as last month. So we're still a little bit below the stock to flow line. Stock to flow line is between 50 and 60k, so that's still 20, 30, 40% up to reach that line, and we have 3 more months to do that because the halving is in April. And April is month 0 in my model, the last blue dot. So we have 3 more blue dots to go. And well, let's hope it goes towards that line. That is at least what I expect. And that's what it did last 3 times.
PlanB got famous with his stock to flow model. But I don't think it's a really useful model because it assumes that demand is pretty much unlimited and that it's supply that dictates the price. That's not true. The way the stock to flow model is calculated is PlanB took several different other assets. He looked, for example, at silver and at gold, and he looked at how much new flow, how much new issuance is there per year, and he put this into relation to the overall market cap of the asset. In other words, the less new supply there is, the more rare the asset is, the higher the price should be. And since there is a halving every 4 years and Bitcoin becomes more and more rare, the fair price of Bitcoin should jump up every 4 years. This is what we see in that chart. But when we look at this chart, we saw a massive overshooting in 2013. Then we got a bit above in 2017. In 2020, we barely reached it. And so what appears to be an underestimation of Bitcoin's potential in the early days now tends to be an overestimation. We can't always 10x in the market value every 4 years. So I'd be incredibly surprised if we are able to touch the line again. There are a lot of examples where the stock to flow model breaks. Why should it work for Bitcoin, right? Ethereum has even negative net issuance. There are many other cryptocurrencies that don't have any issuance whatsoever. Why is Bitcoin then the largest of the cryptocurrencies? It doesn't make sense. It's not just supply that's driving the prices. It's mainly demand. And because Bitcoin is already so big, it's very hard for it to again 10x. There isn't simply enough demand. Don't misunderstand me, right? I do believe that Bitcoin is a good long-term investment, better than stocks, for example. But I do not think that we will see a 10x every 4 years with every halving as suggested by this model.
Next chart, RSI. There, same story. Not much has changed. It's the RSI is 62 like last month, and again we have 3 more blue dots to go. And if we look historically to the blue dots, the last 3 blue dots before the halving, we see here in 2020 this big dip, and many people are referring to that big dip like, okay, we're gonna have a big dip before the halving. Well, not necessarily, because this was, of course, the COVID dip. And I'm not saying we can't have another COVID in the next 3 months, but this was a worldwide event that impacted all the major financial markets and of course Bitcoin too. But the odds of that happening in before April are not that high. So if we go 4 years back to 2016, the last 3 blue dots were up. And if we go to 2012, we have blue dots in the range 65, 70. So that's at least a little bit higher than we are today. But yeah, one dip here. I don't know why that was. Try to look it up. I don't know. So everything is possible. But mind you, I think the important thing is that it's above 50. The RSI is above 50, and everything above 50 indicates an uptrend. So we're still in an uptrend. And that means that the next 3 months towards the halving, in general, should be up to maintain that trend. I don't think it will dip back below 50, the RSI. So we will stay in the uptrend area, and chances are high that we're just slowly crawling up.
What can we say? I think we can say that the RSI isn't properly used here. I think the RSI is better used on very short time frames. The relative strength index looks at the volatility, at the short-term volatility to an average. The relative strength index looks at the volatility, the ups and downs relative to an average. So if we currently shoot up, then the RSI is high. If we only creep up, then the RSI doesn't go up that fast. So it's a measure of extreme values. When we are very high on the RSI, we should be rather selling. When we are very low on the RSI, we should be rather buying. And again, this works well on short time frames. I like the hourly RSI, for example. It doesn't work that well for following trends, because have a look at this chart. PlanB mentioned that we are bullish whenever we are above 50 in the RSI. But see those times when we're actually below 50. This was maximum depression territory. It would have been more wise to actually buy whenever we were below 50. And it would be better, of course, to sell whenever we are very high here. What we are seeing here is that the bear markets tend to become more and more bearish, as in the lows tend to get lower over time, but the same is true for the bull markets. It does appear, just based on this chart, that we are not extremely heated right now, and this is aligned with a lot of other metrics, for example social engagement metrics as well. Do we have to see these massively overpriced values again? Who knows? If we do see them, it's of course a good selling opportunity. Right now we are pretty much in limbo. We are neither super bearish nor super bullish. At least that's how I interpret the data, even though I would never use the RSI on such a long time frame. I would never use it on a monthly time frame.
Is the moving average, the 200-week moving average. And that moving average is 31,000 right now. Bitcoin is 42, so it's higher than the 200-week moving average, and it's diverging. Bitcoin is diverging from the 200-week moving average. So in my opinion, and certainly because if we look historically, when Bitcoin is diverging from the moving average line, and here too, you won't drop below that line. So that could mean, not a guarantee, but it could mean, and that's also my opinion, that we will not drop below 31K again. It's sort of the floor at the moment. The nice thing is that this floor is rising, because as you can see, the 200-week moving average is always going up. It's always rising. So next month, it will not be 31. It could be 32 or 35. Because what we can also see, it's rising faster. It's curving up. So sometimes in the bull markets, the moving average is curving up, like here. And sometimes when the bear market comes, it is curving down. And right now, the rises are getting faster and faster. So that's very interesting, because that means this floor will go up. And it's an interesting thing to watch.
The main problem with crypto YouTube is conflict of interest. Too many YouTubers shill garbage, promote garbage, and fill up their pockets in the background. Not this channel. Instead, there's simply the offer where I share my skills, my perspectives to you, and where I also share direct access to me, where you can ask me any questions. Feel free to check it out. The premium membership link is down below. I don't think it makes sense to look at the 200-week moving average anymore. The reason is, in the past, people believed that this is the absolute floor, but it's not anymore. We have seen extensive times below the 200-week moving average. Now, PlanB talked a lot about the slope of the moving average. So the first derivative of this line. Now, what determines the slope of that line? If you think about it, right? How do you calculate the moving average? You simply just take the last 200 values. Now, if you want to calculate the next value, you're simply moving that window one tick to the right? So the only difference between today's moving average value and tomorrow's moving average value is today's price relative to the last price. So we get an upward slope when today's price is higher than the price 200 weeks ago, and we get a downward slope when the price today is lower than the price 200 days ago. So the slope of the moving average is simply just the delta between those two prices today versus the one 200 weeks ago. So what's basically said here by PlanB is that if you buy Bitcoin and you hold it for 200 weeks, that you can never lose money. I'm not sure if that's really true. We will see a point in time where returns are diminishing so fast that at some point the volatility will be strong enough that today might be a lower price than 200 weeks ago. It might temporarily happen. I'm not a fan of this model anymore. We've already broken this in the past. Why not break it again? But let's continue with the next model.
Next chart. Bitcoin in profit. 90% of all the Bitcoins out there, 90%, orange, is in profit. That's the highest monthly close since October 2021, the all-time high of 61. So this is the highest percentage profit since this all-time high. Only the 2021 buyers here are in loss. Everybody else is in profit. And we can only have blue after red. Blue after red. Here also blue after red. And same happened here. We have red, then blue. We haven't seen red yet, so I do not expect blue to come back. We first need the red. And also after orange, after the 90%, always comes 100%, a new all-time high. So this means that we see another all-time high before another crash, in my opinion. And usually that is 6 months after the halving. So that would be October-ish this year. We could see a new all-time high. Very interesting.
Are we looking at the same chart here? Because I see somewhat of an orange point here, and afterwards we did go into the blue. I don't really think that the red points are that useful here, because when people are in profit, they simply just might continue to ride the wave, right? Trends tend to continue in Bitcoin. But where this might be useful is when we are close to blue, right? This might be buying opportunities rather often. And the fundamental idea here is that people tend to not sell their Bitcoin when they are in losses, because fundamentally people still think that Bitcoin doesn't expand as quickly as fiat. And so if you are in losses, you can simply just wait it out until Bitcoin hits new highs. So the selling pressure tends to diminish as people are in losses. And so buying whenever this is blue might make sense. But selling when this is red, or going totally deterministically that we always have to go from blue to red to blue to red, I think that's over-interpreting the data. Let's continue.
Next chart. Bitcoin realized price. Now, Bitcoin realized price is 23,000, up from last month. The 2-year realized price is 32,000. And the 5-month realized price is 40,000. Bitcoin, of course, 42,000. So all these realized prices are going up, and Bitcoin is above all of them. And that's a very bullish sign. We see that at the start of every bull market, that Bitcoin is above all those realized prices. They all go up, and Bitcoin stays above. Sometimes it touches the 5, so these little dips, these little crashes during a bull market, where we see that Bitcoin goes back to the 5-month realized price. And, well, we know at the moment that's 40,000, so that might mean, no guarantee again, but that might mean that Bitcoin will not go below 40K ever again.
Who knows if that's true or not? I simply take the realized price. I don't really like the shorter term realized prices. In case you don't know what the realized price is, the realized price simply just looks at what's the current cost basis of the overall market. So the current realized price is simply at what price on average did Bitcoin move in the past. So when the current price is below the realized price, that means that the market in aggregate is in losses. When the current price is above the realized price, the market in aggregate is in gains. And of course, when it's in aggregate in losses, there is less selling. When it's in aggregate in gains, there is potentially a bit more risk. And yes, we have seen this before. We have seen the price, which is here in red, being above all three of those realized prices, but then still actually going below the realized price. Here, this is the COVID crash. And we simply just don't see this because the resolution of the data is so low, but actually the price went below the realized price during that COVID crash. So I simply just like to use this model, the Bitcoin realized price, to find good buying opportunities. I don't necessarily use it to time the bull markets.
Next chart. Bitcoin realized return. So this is the coins that were sold last month in January. They were sold at a profit of about 24%. So that's green. And that's the fourth month in a row that coins are sold at a profit between 20 and 30%. And so sellers are taking profit. They're not cutting losses. That would be blue. No, they're selling at a profit, and that's a sign for a bull market to come. And bull markets, and that's what we're waiting for at the moment. We'll see realized returns of 40 to 60%. So we're still a bit below that, but it will be there.
Again, I don't know why PlanB is doing this, but he is, again, ignoring the corona crash. I don't really think that we see a lot of structure in this, to be honest. It wouldn't have always been good to buy whenever we are blue or sell whenever we are red or do any kind of other structure here, because this is all over the place. But look at this, right? People were taking profit above 60% already here just to then see the subsequent corona crash. This here looks pretty innocent, but actually this was a drop from here to here of 70%. So just because we are turning a bit more greenish now doesn't mean that we have to go up from here. I don't really like this model whatsoever. I don't think there's a lot of structure in this. I don't think there's good indications for doing anything in any direction. But let's continue again.
Market cycles. We are still in the accumulation phase. Not much has changed there. We're hoping to see the red dot soon. That's the most frequently asked question on Twitter at the moment. When red dot? Well, I don't know exactly when, but I can see it when it's there. Usually it's after the halving, like here and here and here. That's always a little bit after the halving. And just before a new all-time high. So the last all-time high was, of course, 61, a closing price, right? It's not 69 intraday, but it's or intra-month. It was a 61 close of October. With the halving and knowing that, I would expect to see the next red dot in 3 to 6 months from here. So that's April to July range.
This is something I found rather surprising because the model has been built by PlanB, but he's not showing how it had been built and what's the current thresholds for those different levels. There's probably some kind of value being calculated, and whenever that value crosses a certain threshold, then the dots turn from blue to red. Would be interesting to know that intermediate value now, right? How close are we to that threshold? But he's not sharing this. He simply just says, I don't know when it comes. Let's see when the dot appears. It would be interesting to get the calculations behind this and to see how close we actually are, because this seems to have been a model that worked relatively well in the past. We got a nice entry point after the depression in 2018, and we also got relatively nice exit points whenever we turned yellow again. Looking forward to your thoughts in the comment section. I'm trying to make this as constructive as possible. This is not just a video to bash PlanB, but to bring the conversation further, to refine the models potentially. If it's your first time here, feel free to subscribe. I publish videos regularly. A like would be very much appreciated as well. It helps the channel grow. There's also a free Telegram. Link is down below.